You thought it was over, didn't you? Well, not even close, because inflation is just getting started, or so it seems. We are going to look at the measurements today, the inflation today, and the effects of this all on you, the individual. Let's begin right here. Fed's preferred gauge shows inflation accelerated even more than expected in August. So the Federal Reserve uses a metric that is designed to keep inflation low, to keep it subdued, and they can't even handle that today. It's unbelievable. Here you can see that core inflation rose 4.9% from a year ago in August. 0.6% on a monthly basis. So these are the statistics that come out. And what's happening here, as I talked about in the previous video, is that, quote, sticky measures of inflation are still up. They're still rising. And this puts a problem on the individuals when they have to have higher rent. For instance, that stuff does not come down, and that's an issue, obviously, for a lot of people. Wary investors struggle to evade market tumult. Now, you see all three major U.S. stock indexes are heading towards their worst annual performances since 2008. The issue here is that many people were relying on the performance of their stocks or their portfolios to actually subsist. This is unbelievable, but that's what happened in 2020. So many individuals were saying, I got enough gains from my crypto. I got enough gains from this stock that I don't need to work. I don't need to actually participate in the economy. I'm just going to sit back and relax. Well, that works in some cases if you have a lot and if you are diversified in many cases and you've got different businesses and different sources of income. This doesn't happen in a fluke for most people. And that's what they're learning today. Unrelenting inflation has taken a toll, leaving more Americans living paycheck to paycheck. Now, these stats, I bring them out every time I find them. Sometimes you see it's 70%, and other times it's 50%, and in this case here it's 60%. 60% of the people living paycheck to paycheck. Now, it really depends. It depends on the survey, depends on what area, but we know that people live paycheck to paycheck. And in fact, what I have found is that no matter what the salary is, and I'm talking about the data here, I actually have seen the data over and over again. That doesn't matter what salary people are making, they will always go paycheck to paycheck. The vast majority of people. Okay, that is an absolute fact. More than half of people are going to live paycheck to paycheck. They're making $250,000. They are going to live paycheck to paycheck. And as long as they keep getting paid, and as long as stuff stays reasonably the same price, they don't have to worry. But if they lose their job and or stuff goes up in price, there's a problem. And that's where we are at today. And that's what I'll break down further. You got to stick with me here, okay? Gas prices skyrocket yet again, approached new record in California and Los Angeles. If you look at this, yes, it jumped another 11 cents overnight. And this is an incredible thing to see in some of these areas, what people are paying for gas. Don't worry though, because everyone's going to be forced to have an electric car pretty soon in California. So I don't know what they're going to do. But anyway, the point here is that this is going up, and this is something that if people are using it on a daily basis, they're going to be in big trouble. This puts additional pressure, of course, on everything to do with transport because it makes the prices higher. Input costs are higher. That means higher prices for the consumer as well. You can see that PMIs, when you look at manufacturing, you can look at services, different indications here now moving into or have already, in this case here, contracted. And what does that mean? It means we are in the middle of a slowdown. It could be considered a recession. Depends who you ask, of course. They're not going to admit that. But that's all I'm trying to show you, that the indicators are showing recession. Okay. Inflation is soaring across the euro area. Some areas, the darker the area gets, the higher the percentage, and that goes above 20% for places like Latvia. But you will see that Europe is feeling it. And obviously you're going to have Germany in there feeling it pretty bad, Greece as well. If they're dependent on the Russian gas, and then you deal with these things where suddenly that stops coming through, well, you got a problem. Euro area headline HICP inflation, no matter how you measure it, this has been going up like crazy. I know I get asked all the time, talk about the X and the Y axes. All I'm just trying to show you here, quite frankly, is that it's been going up in a straight line beyond what the euro area has ever experienced. That's what we need to know from this. And this is where it gets real serious. just let me show you this right now and understand how we've expected this, you and I, and we've talked about this before, and the bullwhip effect and all this, but you need to know what's happening here because it's going to happen in more places. Nike's inventory glut sends stock down the most in 20 years. That alone is enough, but what's happening here? They're facing intense margin pressure. Gross margin misses estimate on the markdowns, freight costs. So they were paying freight costs, but that was happening before. Freight has actually gone down in price. But anyway, they're having inventory glut. How does a company like Nike, one of the biggest companies in the world, that doesn't know how to forecast their inventory? They thought there were going to be more people buying. Well, no. And we got to look right now at what people are actually buying. This is important, very important. Are they spending their money on some nonsense $250 pair of shoes that looks nearly identical to the other one? And do they really need that second pair? Many people are starting to say, you know what? I'll pass on that sneaker. I'll wait it out. Okay, that's what's going on here. For myself, when I'm importing products, when I'm moving them through, these are large sums of money that have to come, and I'm aware of what happens with freight. I'm aware of shipping times, shipping costs, and everything. We're talking about $100,000 at a time, and so I'm able to see this, and I'm able to give you that insight. And right now, shipping times are, I would say, relatively normal. When we look at cost, also pretty normal as well. We are not in the same situation of 2020 and 2021. So these input costs that they're talking about are, not from what I'm experiencing. And at the same time, it depends on what product you're selling. And that's why I tell people all the time, it's the product or service that you're selling that needs to be able to withstand that downward pressure, or you're going to be in big trouble. That's just a matter of fact. Okay, that's Nike. Software robots are gaining ground in white-collar office world. I thought this was incredible to read this to you because everything that we are seeing with robots today is, people think like a robot, like, okay, this is going to be something out of, RoboCop or something. This is not what it is. Okay, a lot of that is simply computer programming. And it's replacing jobs. And they actually talk about the jobs that they are replacing in here. So if you waited until this part of the video, you got some good stuff, because you don't necessarily want to be involved in these professions if they can and likely will be replaced by those automations and robotics and so on. Artificial intelligence is getting better at all kinds of office tasks. That means business is more efficient, but it could also pose a threat to jobs. So here are some of those here. Automation potential. Pattern-oriented or predictive work are especially susceptible. And so at the top of the list, market research analysts and marketing specialists. Beyond that, you get sales managers. Interestingly, computer programmers. And I think there's a little bit of nuance to that, but anyway, personal financial advisors is another one, and I wanted to stop there. Personal financial advisors are the one because right now I've seen it myself where you have this robo-advisor. And why? Because the financial advisor, I remember when I was very young and I went to the financial advisor and I said, I want to put my money with you. And he's clicking the boxes. Okay, check this, check that. What's your name? What's your address? Okay, that sounds good. What's your risk tolerance? I said, well, I don't know. And I was just kind of fumbling around. And he said, that doesn't matter. And he just clicked a few buttons. What did he click? What was he doing? What's going on here? It's because it doesn't matter. It all goes into the same funds. It's nonsense. When you have robo-advisors, it's going to be the same thing, probably better, because they can ask you a whole bunch of questions and they could find different places to park your money. Okay, and I think it's actually better that you learn about this stuff on your own, but that's a whole different story. Look at this next aspect really quickly, okay? Runaway bear market blows past everything meant to slow it down. History on past market cycles shows more pain may be ahead. The 50% trading indicator fails to work as the S&P 500 sinks anew. So this has gone beyond this. Really, for some, if you look at some indicators, they are showing, wait a minute, this was kind of supposed to stop already. What's happening here? Well, as they show in this article and others. I'm not going to get into all the details, but basically what we're looking at is a very difficult market, okay? Very difficult. This is just the 50% indicators they're showing you here. All I'm trying to highlight is that when you look at the markets right now today, without the central bank intervention, there cannot be sustained growth. That's it. That's all I want to talk about. If you want more details, of course, they are in the article. Don't fight the Fed. The previous 6 bear markets saw a bottom arriving amid Fed cuts. What does that mean? Federal Reserve cuts interest rates, bear market ceases to be over, and the market goes up from there. Follow the central banks, follow the money, as they say. Bear market not over until excess liquidity turns up. So then again, it actually, right now, as you're seeing this here, it's kind of looking like it's turning up, but that's too early to tell. All I'm trying to highlight here at this moment is that we must be aware of what's going on, or we're going to be the, part of that sinking ship. I got a lot of details here. You wait until this part, take a look at this. What I really wanted to highlight for you today was that yes, inflation is off the charts, but what can we do? What are some things? And I've listed a whole bunch here actually. For your power consumption and your power provider and all your other providers, are they optimized? Can you actually go to them and see, is this the right thing I should be doing? Sometimes they work on tiers, sometimes they work by times. Is your personal situation optimized? Check that out, you might be surprised. Then we have this, is your physical location optimal for you and your family? For a lot of people, they live in that area just because, well, that's the way it was. But is it optimized? Is it optimal? You decide. Call every single one of your providers and ask for current promotions, loyalty discounts, financial hardship. I did this myself. I talked about this fairly recently. I called my insurance company and I said, do you have any promotions? No, sir, we don't. Well, come on, I've been with you for long. I got this and that. You got to help me out. Multiple properties, you got to help me out. Well, okay, let me see what I can do. 10% off. Just like that. Now, 10% isn't life-changing, but sure better than a kick in the behind, let me tell you. Is there anything wasteful that you really don't need? Look, you got to be serious with you and honest with yourself right now. Do you need 16 different, Netflix and Disney and all this stuff? Do you really need that? Do you really need certain things in your life? If not, you might want to let those go. Then we have this right here. How you spend your time today determines your future, so keep that in mind. What do you do on a daily basis? Do you read? Do you listen to audiobooks? Do you exercise? Do you garden? Or do you watch television? Do you, go out drinking and partying or whatever the case may be, okay? Just whatever you spend your time on today determines your future. So that's up to you. You make that decision right now today. I know for a lot of people, they're in, unfortunate circumstances, and I understand. But we need to do our best with what we have. If you appreciated this message, you've got to subscribe to the channel, hit that button down there, and I'll see you tomorrow. Take care.